Right into it. What a disappointing way to kick off the new quarter. More of the same in terms of really these macro concerns dominating.
James, last quarter we saw a loss of 13% and a lot of investors would have been hoping for a better quarter, but we are off to a bad start. We finished the day down by 2.8%. Now, we did see a negative lead come through from the US. The US was down by 2.5% on Friday, but it does look like jitters over the Eurozone once again dominating our session. It was an extremely light session, and that may have exaggerated the volatility on our market, because we not only saw a public holiday in New South Wales, South Australia and the ACT, but around the region we did see China as well as South Korea close for a holiday. But a typical risk-off day on the Aussie market. We saw the energy, the materials, the industrial and the financial sectors all being sold off quite heavily. In fact, for every one stock that rose on the market today, we saw 3 stocks falling. Unusually, there was a little bit of support in some key areas. The retailers was one area. We saw Premier Investments doing well, and David Jones also finishing up 0.3%. The healthcare seeing substantial support as the Aussie dollar continued to fall, and the Aussie dollar has a big impact on the healthcare sector, which makes most of its revenue offshore. So altogether, not a good day, but we did see some bright spots on the market, mostly in that retail space, the healthcare space, and of course gold.
The problems, I suppose, that the fears in Europe is this now this idea of the freezing, the further freezing, if you like, of the interbank lending happening at the moment. In particular, Dexia, that Belgium/French lender, coming under a little bit of a cloud.
Not surprising, investors are very cautious when investing into Euro banks, whether it's through the shares, and we've seen share prices plummeting over the last couple of months, or whether that's being reflected in the credit default swaps, where Dexia's CDS is reaching an all-time high last week of 900 basis points, or whether it's in Eurozone bank bonds. So it does look like it's a very difficult time for those Eurozone banks. And if we have a look at those Eurozone banks, they are more highly geared than the US banks. So there's potential problems there that the market is starting to price in, but probably doesn't really realise the extent of. And Dexia is a bank, a financial institution, which was bailed out during the global financial crisis. It received a $6 billion bailout from Belgium as well as France. And it does look like we are going to see the finance ministers of both countries meeting today to talk about how they can shore up the balance sheet of Dexia. So if we have a look, it was ranked the 49th company in the Fortune 500 companies in 2010. It is the top one in Belgium. So altogether, I guess all eyes on that, and really just highlighting the difficulty of getting access to funds if you are a Eurozone bank at the moment. Not only are we seeing share prices tank despite that short selling ban being extended last week in Italy and some other European nations as well, but we are seeing those credit default swaps really reflecting the cost of insuring the debt of these banks going up, and investors staying clear of some of these Eurozone bank debt issues.
Julia, just on the concern, the issue of liquidity amongst those Eurozone banks, I thought that was to some extent addressed by the host of central banks, led of course by the Fed and the ECB and so forth. They were making available US dollars to help ease that concern. That is just not come to fruition, or simply they're not providing enough liquidity?
Well, that's been one of the things that the market has been focused on. We have seen that US dollar facility, that the line's being opened up again, and we have seen a number of drawdowns on that, and the market's speculating as to what financial institutions are using that short-term US dollar lending facility. So it does look like there may be a lack of US dollars in the system, which has led to drawdowns from that facility, but there's no real transparency on which financial institutions have drawn down on that facility, where that money is going. So I guess a little bit of speculation in the market as to which banks are in trouble. We have seen some of the big ones come out and announce asset sales to try and shore up their balance sheet. We know that BNP Paribas is looking at asset sales. They're trying to raise cash as well. Warren Buffett coming out to say he's been approached by Eurozone banks for more capital, and they've been going to the Middle East as well. So not only is Greece very much in focus, but I guess the larger part of the equation is the systemic risk that we could potentially come out and see out of that banking system once again.